We're 2 hours into trading. It is Tuesday, May 4th. Hello, traders. Let's take a look at yesterday's pick. Let's take a look at the market. Going to spend a lot of time on the market today because it's very, very important, especially for your swing trade. So, first of all, yesterday's stock pick was ABBV. I liked it on the long side. Going to the 5-minute chart, and you can see this is about when the video came out. Stock didn't do much of anything. It finished right where it closed. And you could think, well, that's pretty much a defeat. If you put up the SPY, you're going to see a headwind that the stock had to fight. Look at the selling into the close yesterday by the SPY. Today, look what the stock did. Boom, higher. What was the market doing? Down, down, down. Most stocks got crushed today, but not ABBV. It went higher. That is the edge that we trade every day. That's the advantage of trading relative strength. That's what I'm trying to teach you each and every day. Yes, beautiful pick. I think ABBV continues to go higher. Let's take a look at the market because for the last 2 weeks, I have been telling you, be careful. We have not been swing trading. My videos have been day trading videos because I did not like this price compression right here. And the $10,000 question over the course of the last week has been, are tech giants going to be able to fuel a market rally? Or is all the good news already priced into the market? Well, I think we have our answer. We saw Apple, Google, Amazon, Microsoft, Facebook, all of them posted unbelievable numbers. We had a dovish FOMC last week. You would think that the market would be screaming higher. Not so. Lots of tiny bodied candles called dojis. They signify equilibrium. Buyers and sellers are paired off. I've been telling you in the last couple of weeks, we are likely to see some of the air get let out of the balloon. The excitement will wane once the tech giants have reported. Profit takers tend to get more aggressive once they've posted their earnings results. And I pointed back to right here in January. This is when all the tech giants were reporting earnings, and look what happened once they all reported. Boom, right down. This is the type of dip that I'm expecting right now. And I am looking for support. We've got a couple of support levels. The first one is SPY 411. That comes into play right here. So let me click GTC, and I'll click right on that low right here. And there's your support line. If we breach it, I'm going to know about it. I'll get a pop-up alert. The next support level is around this 405 level. Then after that, it's down around 400. Let's put up the major moving averages to see where they come into play. The 50-day is the only one that's anywhere close, and the 20-day moving average comes into play right here, and you can see that we are below it. 20-day, yes, I look at it, but I can't say that I consider it to be real significant. This 50-day is much more significant at the 400 level. So your levels to watch, 411, 405, 400. If we get down to 400, that will test this breakout. I don't think that we're going to spend much time there at all. So if we come down, it's going to be probably an intraday with a rally off of that support level. I still feel that economic conditions are going to be robust this week. We have ISM services being posted tomorrow, ADP. We've got the unemployment report Friday. They're talking about 1 million jobs on Friday. That is a big number. Will that spook traders because now all of a sudden you've got to worry about the Fed tightening because they're getting the job recovery that they want? I don't think so. It's still so early in the game. The one overhang that we have is that on a global basis, economies are a little soft. Europe has had a really tough time with the virus. India is in dire straits. We got the official PMI, the composite PMI from China a few days ago, and that showed that growth in April had slowed relative to March. To me, China is the litmus test because their economy's been open 10 months longer than everyone else's. They should be roaring ahead. But the demand for products is soft because the globe is continuing to struggle with the coronavirus. That's going to continue to be out there. So even though things feel fantastic in the United States, 3 million vaccinations a day, that is great news. States are reopening, so everything domestically looks very, very strong. We've also got savings rates near an all-time high, or at least a high for the last 10 years or so. $2 trillion sitting on the sidelines. That money is going to be spent in retail stores. It's going to find its way into the market. You don't have to worry about any Fed tightening. We want good, nice, robust economic numbers. States are reopening. So everything domestically looks very, very sound. A lot of that is already priced in up here. That is why I have not been chasing the market. I've been waiting for a pullback. I'm going to reload on that pullback. I'm not looking for it to be very lengthy. I think that it could last maybe 5 days or so. It could be pretty swift and pretty steep because we've got a ton of bullish speculators in the market right in here. They are going to get flushed out. I'm going to bring up some charts and we'll go into the daily chart here, and I'm just going to put up the largest tech companies. And we're going to do a little quick technical analysis. These are the leaders, right? This is where a lot of the market strength has come from. This is 20% of the S&P 500 is concentrated in a handful of stocks. Yeah, Microsoft, not a good earnings reaction. Coming and checking this breakout right here. This could be a failed breakout if this level fails to hold around that 244 level. Okay, well, let's take a look at another one. How about Apple? Apple should be doing well, right? Not at all. Didn't even challenge the all-time high. Compressed right here after earnings. Now it's breaking down. Let's put up the major moving averages. And we're below the 100-day moving average. It didn't just creep down to the 100-day moving average. Wham! It blew through that 100-day moving average on the first try. That is bearish. This is actually a very good short. It's a good short for today. It's probably going to be a nice overnight short as well. Tech stocks are weak. There's strength in basic material stocks and in healthcare. So now we've got Microsoft and we've got Apple. Well, Amazon. They should be going gangbusters, right? They posted a good number. Not so fast. That is what I call a failed breakout. Breakout to a new all-time high. Boom, boom. Heavy selling. Now, those buyers who were in here are getting flushed out and taking profits. So number 3, how about Google? Hey, that's been strong the last 6 months. Another failed breakout right here. Earnings after the close, nice pop. That's a failed breakout. All right, Facebook. Facebook is actually the strongest of the 3 in my opinion. Got that breakout right here. That's a failed breakout, filling in all of that earnings gap. So if you can't get any kind of traction out of the 5 biggest companies, it's going to be hard for the market to rally. So I'm going to put up my pre-open market comments, and I'm going to show you when they were posted. And here you can see they were posted about 7 minutes before the open, and they're extensive. I write an extensive commentary every single day, and I give instructions for swing traders, I give instructions for day traders, and I just want you to see the type of commentary that I put out this morning. Day traders watch the first 30 minutes of trading. If we see consecutive long red candles stacked one on top of the other in the first 30 minutes, this will be a bearish trend day, and you should favor the short side. If the market's making a new low for the day after 2 hours of trading, keep bullish trades to a minimum. And then I outline the support levels. Let's take a look at the S&P 500 very quickly here. There's your 30-minute or your 5-minute chart, excuse me. 1, 2, 3, 4 long red candles in a row in the first 30 minutes. This is going to be a bearish trend day, folks. That was your sign to look for excellent shorts. So that's what we've been doing today. I could go through that list, but I'd rather emphasize a really important point today, and I'm going to be looking for longs because I want to get my shopping list together. I want you to have your shopping list together. I'm going to show you how we do that. So again, if I look at the daily chart, you can see that we are pulling back on the S&P 500. We've still got room to go on the downside. But as the market starts to fall, there are two advantages to this approach. You could be saying, well, if you're so dang smart, how come you're not buying puts? I'm not going to buy puts into a market rally that looks like this over the course of the last 12 months. That's just stupid. You don't do that until you have major technical breakdowns and closes below those technical support levels. The smarter move is to try and join this trend, and you wait for drops like that to buy. Nice. Drops like that to buy. Nice. Any dip in here anywhere close to that 100-day moving average or even the 50-day moving average has been a buying opportunity. That's the best way to trade this market. The reason for that is that when you get these market declines, they are so fast and furious, but the snapback rallies are violent. You come in here and you think, oh, this is great. I'm making a ton of money on my puts. Oh, I can't wait. This is going to be a great week. And then all of a sudden, you get this rally out of nowhere and it never looks back. Very hard to make money on the short side when you're fighting a longer term trend like that. That's why I do not buy puts in this type of market environment. I'm in cash for my swing trades. Do I day trade from the short side? Oh, you better believe I do. But I do not overnight those short positions because I don't want to get caught in one of those traps. Instead, I'm going to be watching the market come in and I'm going to be looking for relative strength and I'm going to be getting my wish list together because once that support is identified, boom, boom, boom. I want to get in. I want to put my next round of trades on. Market starts to find support. It lifts off. Those positions are in great shape and I've got a nice cushion to work with. That's what I really suggest that you do. So I do not feel that support is there yet, but we're going to be looking for stocks that look very attractive right now. So I'm going to go into my favorite swing trading search. Uh-oh, there's no results. There's nothing coming up in the search. The way that Option Stalker is designed is that when you see a lot of candidates on one side of the market, bullish side, and none on the other, bearish side, it's telling you you should be focused on longs. When you see a lot of bearish candidates, you want to be focused on that side of the market. So the fact that there aren't any stocks in Pop Bull doesn't surprise me, but Pop plus Bull, these are the stocks that were in the search yesterday, and now we can see them again today. And what I'd be looking for are stocks that are up on a nasty down day like this. These stocks will certainly have strength. VXX, that measures option implied volatility, it is moving higher. That is a warning sign that we may have more downside. So let's take a look at the first stock, VXRT. You can see this nice bounce here, big volume. Stock's been able to hold its own pretty well in here, able to hold those major moving averages. Not going to be my pick of the day, but I think this stock is actually faring pretty well given this bounce right here from $4 to $10. It's up 100% and it's able to hold most of those gains. CVS. Love it. This is your pick of the day. Look at this horizontal breakout right here. We had earnings before the open today. Let's put up the 5-minute chart. Beautiful. Nice gap up higher. Market down, down, down. Stock up, up, up. Market getting trashed in here. Stock runs up. Market has another leg down. Stock pulls back a little bit. Look at the market is still near its low of the day. This stock is making a new high for the day. Relative strength. Big breakout on a daily chart with massive volume after earnings. This is the kind of stock that I want to own when the market finds support, just like ABBV. This is your pick of the day. Now let's talk a little bit about the market as well, because here's what I see unfolding. The easy money on the bearish side of the market today has been made. We've had some really big drops. We had a drop here and a pause for an hour period of time. When the pause is this great for this amount of time, that means that support is starting to form and that the next low will be what I call a marginal new low. It's not a devastating new low. It's not an air pocket. It's relatively contained. And this is exactly what I've been mentioning to My members, yes, I do believe that the market is going to drift lower today. It's going to be a bearish trend day. We're likely to see a nice little bounce midday, and that bounce would give you an opportunity to buy a stock like CVS. But then beware, only for a day trade, then you're going to get a rollover and we'll see another sell-off later in the day, but it's probably only going to get down to 411. I don't see the bottom falling out today. Now that's still kind of a nasty drop, and yes, we do still have some downside. So the easy money, as I said, on the bearish side has been made. And yes, we can take a look at some bearish stocks as well. Let's go through a couple of other stocks on the long side though. Crocs, very choppy stock. You can see up and down. I'm going to take that SPY off, but you can see the relative strength. Market down, stock up, stock holding its own. And you can see earnings before the open, stock shoots higher. Look at this strength. It's been able to hold all of these gains. And the reason that that's important is because if there were profit takers who felt that this was all fluff, this earnings reaction is nothing but fluff, wham, 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 they would fill this gap and they would take profits up here. Pretty much like what we saw on Facebook and some of the other tech stocks. Put the Facebook chart up. So that's what it looks like when this is all fluff. Boom, boom, boom. They don't hesitate to take profits up there. When a stock like Crocs is able to hold all of those gains, it tells you there are buyers. I like Crocs. I think it's going to be a really nice trade. If you can buy it somewhere on the low from that earnings announcement date, which is around the $92 level. So if we get a nice big market drop, stock comes down to $92, I think that's going to be a great place to own this stock because I don't think that it can fill that gap. I think that buyers are so lined up. If you can sell a bullish put spread down to the 85 strike right here when it pulls back to 92, I think that trade is gold. I think that one works really well. ET, really nice. Look at it hold those gains. FLWS, also big pop in here. Actually moving higher even after that big earnings gap. This stock is strong. This is the type of setup that we're looking for. VALE, basic materials, UPS, can't chase it after a move like that, but that is super, super strong. Any dip on this stock would be a buying opportunity. This is the time to get your stocks together, and this is the process that you go through. So when the market is pulling back, yes, you get a better entry point, but you also get to see how the stock responds to heavy market selling. And the ones that are stubborn and do not go down, they have relative strength, and those are going to be the ones that you want to own. So let's take a look at a couple of bearish picks because I get those questions all the time. You only look at the bullish side. Show me some bearish stocks. How might we trade those? I could take a look at Pop Bear. These are going to be excellent swing trading shorts. But I'm not swing trading shorts. Ooh, almost caught myself in a trap there. If you were looking to swing trade shorts, these would be the ones that you want to trade. There's a breakdown. You see through the horizontal support level right there. JMIA looks like a great short. Look at it breach that horizontal support and the 200-day moving average. Downward sloping trend line. Looks like a very good short. JMIA. BHC. Also trying to test that 100-day moving average. Earnings before the open today. DKNG, you can see downward sloping trend line, not able to get through the 100-day, breaking that support. This stock is likely to test the 200-day moving average, which comes in around $50. PLTR, ooh, that's going to be a nasty one if it drops and breaks this support. I like that. I'm going to drop an alert line right there. If it breaches that, I'm all over it. I think it's a good short right here. Uber, you can see how it's starting to break down 100-day moving average. So on any of these, if you are aggressive, meaning you're able to watch the market during the course of the day and you're an active trader, these are all great bearish call spread candidates. Here I'd want to get up to about that at least the 100-day moving average. The stock does not look like it's going to get back above the 100-day moving average. ZM, big time breakdown here. horizontal support and a base forming right here, breaking it today. That is an excellent short. Boeing testing the 100-day moving average. Heavy selling, downward sloping trend line through that horizontal was resistance, now support. Could not get back above it. Boeing looks like a good short. Tesla, this one, upward sloping trend line, breach to the downside. Tesla could come in and test that 200-day moving average. TRIP, nasty chart, going to definitely test the 100-day there. Got support here on the 100-day, so Texan, not a good short today because of that support level right there, but if it gets below that 100-day moving average, it could be a good short. Click GTC, find a candle that's close, like that one. Now I'll know if that 100-day moving average is breached. Did you see how easy it was for us to find shorts? I looked at almost every stock in this list, and they all looked good. So pop bull, pop bear, my favorite two shorts, my favorite two swing trading searches. We've got a ton of others. For day traders right now, there's not much better than my ice cold list. Going to the 5-minute chart, these are ones that we've been shorting all day. Amazon looks super weak. Look at that selling. It's never been able to get off the deck. It can't even pop its head up. It's like whack-a-mole. Whack, 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 whack. Every time it tries to rally, whap. They keep sending it lower. Google, look at that. NVIDIA. These stocks have been on the list for a while too. This is not just popping up right now. We've been shorting these stocks all day. WDAY, I think, is a great short. Love that pattern. Having a little bit of a delay in getting the quotes up because of the recording software. When it catches up, I'm going to get a bunch of charts at one time. They'll all start flooding in. There is NVIDIA. You can see the steady selling throughout the course of the morning, not able to bounce at all. So I'm sorry I can't bring up the other charts. There's workday. Let's look at that daily chart. Upward sloping trend line breach, 100-day moving average breach. That's going to come down to the 200-day moving average. Try CRM one more time. Look at that drop. I did like CRM here last week. When it was able to test that 200-day moving average and close right at it, you had to be out. I was expecting this horizontal support, and this is good because it's important for me to point out when I was wrong and I had a stock for day trading, that I liked, and now you can see that it was just faking this breakout right here. But yeah, when it came down to that 200-day moving average, you had to get out of the way, and you can see the selling. Yesterday was your chance. Not only did it violate that 200-day moving average, it breached the 100-day. Oh, you've got to be out on a move like that. You're wrong. But again, everything that I've been discussing over the course of the last couple of weeks has been day trading for the reasons I've outlined. But yes, these are all fantastic day trading shorts. Thanks so much for watching. I hope you're not caught with too many longs on right now. I hope you've been taking my advice and keeping your swing trades to a minimum and waiting for this pullback. If that's you, you're in great shape and you're probably thinking, man, I hope this market takes another 5% drop because then the stocks that I wanted to buy will be even cheaper. Thanks again. We'll see you tomorrow. Thank you for watching this YouTube video. I'm Pete Stolzers and I'm going to keep the trade ideas coming along with lots of education. So make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.